Hey everyone, James here, perennial voice talker and mouth mover from VFS. Also, little bits and pieces now. Not sponsored by Independent Reserve. Someone just gave me this top. So anyway, that's it. That's how that is. Look, just put out my note to clients, and that's going to hit through on Stockhead later on. So bits and pieces of that. Pay attention to what happens on Stockhead, and also I'm just going to tell you some of the brief overview that I've got now. Searching for 7 minutes, I believe, is the way of expressing that. That's going on. So. Last week we did see some pretty good weather. I'm tying all this together, and it's not climate crisis emergency time here, but we did see that late last week, the world average temperature was actually the hottest that it's ever been on record. That's interesting. That broke the day before's record, which was an equal to the day before's record, Tuesday, which was actually a breaking of the previous record, which was held on Monday. So we saw that progressively the world was getting hotter. There's no doubt about that. There's no way around that fact. There's no strange science or strange temperature. It is physically just the average temperature of all the places where they monitor are actually physically getting hotter through here. We are seeing the El Nino impact already starting, and we are getting warmer. I'm sort of reminded of some times of driving through the Australian outback, or just the inback, just sort of not even that far away from the main cities, but just I was reminded of just how hot it can actually get and just how dry it can actually get a few years ago, and we will be heading back into that direction again. That I know more than anything. Middle of winter here, and so I think that maybe some people might be feeling the warmth might be a good thing. Well, let's just wait and see. But I was reminded of when the dams were down around that 10%, 17% area out west, and that was a really bad time. So the situation that we're going to see is going to be more of a pull towards renewables, even though the argument is there as to whether renewables are actually better for the earth or not, but that will be one of those things that there is a pull towards on this thing. However, at the same time, what we've got is potentially a global growth slowdown. Talking about Australia, I can't stress this enough, just how much we are going into some major contraction here in Australia. We may already be in. We're looking at card spending here. We are seeing the average card spending numbers come down. This time now I'm talking about Westpac, whereas we had ANZ card spending numbers from a couple of weeks ago, and now it's sort of been confirmed by Westpac data too, showing that the average trend is definitely down for card spending locally on certain things. I'm not going to go into specifics on these ones, but we're sort of seeing... actually, I've got some high frequency... No, I'm not going to do that. I was going to do some high frequency data from Macquarie Bank. Fascinating stuff, just talking about some interesting stuff, but I might put that in later on. Now, the main question is, has the RBA done enough? I do honestly believe that if we hadn't seen it before, we definitely are seeing it now, that people are going, now is the time to really pull back. Now is the time to really contract ourselves, metaphorically speaking, financially speaking, not literally. Anyway, spending drop. RBA is probably going to take it easy, potentially another one, maybe another two, same as the Fed over in the States. What we are seeing in the States is that excess savings rate, which is sort of a big deal. An excess savings rate in the US is actually now starting to come back down and will completely dissipate. So the excess savings rate is going to be gone by the time we hit about September this year. So that's interesting. Now, the US consumer is 66% of the US GDP, which is about 15% of global GDP. That's pretty phenomenal. So if the US consumer is officially running out of money over the next couple of months and no excess to spend, we have seen credit card numbers actually hockey stick in the States. So that credit card debts are really racking up those numbers on their credit card. They're running out of money in their savings accounts. So that's their excess savings. Now that's contracting and that's running out. Pay attention, invest accordingly based on whatever happens behind that. With regards to the US consumer, keeping in mind that we've also got an earnings recession continuing over in the States. Earnings starts at the end of this week. We're going to see the banks, according to Refinitiv, we see about 5.5% year-on-year contraction in earnings. So that's this continuing earnings recession. Play that as you will. It has been factored in. Remember, once it's known, so it's no shock value, but it just means that the markets are sort of having to reprice exactly where it's going. If then the US consumer adds into that and actually contracts itself again, then you're probably going to start to see more of a continuation of that going forward into the year. Invest accordingly again. Now, the Fed, I think the Fed's probably got another one or two, but we will see inflation. Here's the other thing, is that if we see those things happen, we will see inflation really start to continue to decline. That's going to be good, because bad news... Now, here we go. Bad news, good news, we might see in this particular case where that goes on. Now, before I get to my tea, which I will do in just a second, we're not quite job done with the Fed yet, but we are seeing that there is a crunch in copper, because I've got to stay diversified with what I do. So if you want to have I look at staying diverse and staying invested. Emerging markets, I think, are definitely a place to go. Specifically India, but not to go into that. But we're also seeing the copper production in 2023 is set to be at the lowest point in about a quarter of a century. Now, I'm looking at Codelco. They're the Chilean producer, talking about that they're a 14% decline year on year. We've also got Escondida mine, which we know is about 21.5%. So this is majority BHP owned, 21.5% decline year on year in copper production. Copper production is down, and we are seeing that there's still the same amount of demand. Or maybe there's not. That's the thing, because we've got a global growth contraction, or maybe there's sort of some instability in global growth. We're seeing that China continues to show weaker than expected numbers and weak numbers going forward. That's to be played as it is. Coming into the final minute that I can see here now, even though, and this is where it's very funny with all of these markets and all of these things going on, and it sort of like draws the line back down to what I was sort of starting off with, talking about how the Earth is going into its hottest area. I didn't even mention that Antarctic ice is not forming on the edges. That's a difficult one to sort of describe, but it is actually warmer in the winter in the Antarctic than it absolutely should be, so much so that ice can't actually form there. That'll have lasting effects. However, we did actually strike a record yesterday, which was the busiest day for commercial aviation around the world. You can sort of see how a few things are connected. Global bustling economy, but apparently there's an outlook that we're seeing a global contraction, but we are also seeing an overly dependent use of oil, but we're also seeing heating Earth. Potentially that switches into renewables, and you can sort of see how everything sort of gets all tangled up. Look, that's about all that I've got time for. If you've got any questions on that, read the note, because there's going to be some more detail in there, or just reach out to me, and I'm happy to help you through anything that happens. Have yourself a good one and stay safe this week. Bye.